What if I told you Wall Street isn't free? What if every stock trade, every market crash, and every bailout was pre-programmed decades in advance by a handful of bloodlines that never left power? We've all been told that Wall Street is about capitalism, about competition, innovation, and risk. But what if it's not? What if it's actually a family business, one designed not to build wealth for the people, but to control it? From your 401k to your mortgage, from your paycheck to the price of bread, invisible hands pull every lever, and they've been doing it for over a century. The names have changed, but the bloodlines haven't. Morgan, Rockefeller, Rothschild, Warburg, Goldman, Sachs, 7 families, one network. And if you think that sounds like a conspiracy, good, because the receipts are hidden in plain sight. But before we expose how these families still rule modern finance, we need to go back to the moment America handed them the keys to the kingdom. Where are you watching from? Drop your city or country below. And if you want the unfiltered truth about money and power, hit subscribe now. Because once you see who really owns Wall Street, you'll never look at a dollar the same way again. Our story begins not on Wall Street, but on an isolated island. Jekyll Island, Georgia, 1910. A secret meeting of bankers, 6 men who together represented 1/4 of the world's wealth, boarded a private train car under fake names. Their mission? To create a central bank that would look public but function privately. The result was the Federal Reserve Act of 1913. The cover story said it would stabilize the economy. But the truth? It handed the power to create money, America's money, to the same men who would profit from every crisis that followed. J.P. Morgan represented his own empire. Paul Warburg represented the powerful European banking houses. Senator Nelson Aldrich was their man in Congress, pushing their bill into law. And behind them all, the Rothschild dynasty, funding the operation from London. Sound familiar? A crisis, followed by a solution, which creates a system that somehow always ends up enriching the few at the expense of the many. Since then, this exact pattern has played out again and again, from the Great Depression to the financial crisis of 2008. And each and every time, the same names show up in the shadows. When the market crashed in 1929, J.P. Morgan didn't panic. He rescued the economy by buying out his failing competitors for pennies on the dollar, consolidating his power. When President Nixon took the US dollar off the gold standard in 1971, who benefited? The investment houses and central banks, who could now create wealth from thin air, completely untethered from any physical asset. It's the same playbook, used over and over. First, you create dependency on the system. Then, you control the flow of money within that system. And finally, when the time is right, you rewrite the rules to benefit yourself. This isn't history, it's a business model. Fast forward to today. Wall Street isn't a building in New York. It's a global web of custodial networks. Trillions of dollars in shares are held in trust by just 3 entities: BlackRock, Vanguard, and State Street. Together, these 3 giants manage over $22 trillion in assets. That's more than the entire gross domestic product of the United States. But here is the secret they don't tell you. Those entities don't technically own the stocks. They control them. They get the voting rights. And when you peel back the complex legal layers, you find the same bloodlines that built this system over a century ago. The Morgan Empire merged into what is now J.P. Morgan Chase, one of the largest banks on the planet. The Warburgs helped seed institutions like Deutsche Bank. The Rothschilds still operate dozens of private family offices, quietly controlling trillions through offshore holdings and private equity. And Rockefeller's descendants? They chair philanthropic foundations that buy up influence across media, politics, and academia. Each one is a node in the same network, silent, stable, and untraceable. It's the same invisible empire. It just learned how to hide in plain sight. Now, here's where it gets even darker. Most people think that when they buy a stock on Robinhood or through their broker, they own a small piece of a company. But that's an illusion. Over 80% of all publicly traded shares in the United States are not held directly by investors. They're held in street name, under the custody of a single, central institution, the Depository Trust and Clearing Corporation, or DTCC. The DTCC holds over $87 trillion in securities, and it's not a government agency. It's a private corporation. And guess who its largest shareholders are? The very same megabanks that trace their lineage back to those 7 families: JP Morgan Chase, Goldman Sachs, and Citigroup. Through this hidden layer, a handful of private actors can theoretically freeze, move, or manipulate nearly every share in existence, all without technically owning them. It's not just stocks either. It's derivatives, bonds, and ETFs. Each layer of complexity adds more leverage for them and less transparency for you. This isn't capitalism. It's custodial feudalism. It's a digital version of serfdom where you think you own your assets, but in reality, you only rent them from the families who have owned the whole system for over a century. So how do they maintain this control? To understand who really owns Wall Street, you have to stop looking at ownership and start looking at control mechanisms. It's not about who has the most cash. It's about who controls liquidity, who decides when credit expands and when it contracts. The same families that built the Federal Reserve didn't stop there. They built a second layer of control, a network of clearinghouses, rating agencies, and investment custodians. The modern Federal Reserve System isn't just 12 regional banks. It's a spiderweb where the voting shares, the real power, are concentrated in just a few private institutions. And each of those institutions traces its origins back to the same dynastic players: Morgan Stanley, Goldman Sachs, the former Lehman Brothers, Kuhn Loeb, Brown Brothers Harriman. Each one was founded, funded, or merged by members of these families. So when you ask, who owns Wall Street? The answer isn't a company, it's a dynasty. A digital monarchy hidden beneath the surface of modern capitalism. The power isn't in owning a stock, it's in controlling the system that validates the ownership of that stock. It's a masterfully designed machine, built to siphon wealth and centralize power, all while giving us the illusion of a free and open market. The game was rigged from the very beginning. Ever wonder who really runs the world? It's not politicians or CEOs. Today, through custodial networks and mega asset managers, a hidden force doesn't just influence markets, they own the very system that measures ownership itself. But the real story begins when you follow the money. Not through banks, but through the entities above them. Because the families that built this empire didn't just create banks. They created the institutions that govern banks. And the deeper you dig, the more invisible it gets. So let's decode how 7 families evolved from industrial tycoons to the invisible gods of finance. Step 1. The custodial web. At the center of global finance sits a quiet empire made of 3 firms: BlackRock, Vanguard, and State Street. Together, they control roughly $22 trillion in assets. But here's the secret. They're not competitors. They're each other's biggest shareholders. Vanguard owns major stakes in BlackRock. BlackRock holds shares in State Street. And State Street's funds are nested inside Vanguard portfolios. It's a circular pyramid, a feedback loop of ownership that ensures control stays in the same few hands, no matter who the CEO is. And who founded these giants? Vanguard traces its lineage directly to Morgan and Rockefeller Capital. BlackRock was born from the same institutional line as Merrill Lynch, which was absorbed by Bank of America, whose original capital came from the Morgan Empire. And State Street, one of the oldest custodians of Rockefeller family wealth since the early 1900s. Each one is just another node in the same network. Step 2. The offshore veil. But the true scale of power isn't on Wall Street, it's offshore. In 2023, the IMF estimated that over $36 trillion of global wealth sits in tax havens like the Cayman Islands, Luxembourg, and the Channel Islands. These aren't random hiding spots. They're custom-built vaults created by the same banks that dominate Wall Street. JP Morgan, Goldman Sachs, and Citigroup each operate hundreds of subsidiaries across these havens. And when you trace the trusts, they always lead back to familiar names. The Rockefeller Foundation, the Rothschild Trust, the Warburg Pincus Group, even the new money. Bezos, Musk, Gates holds assets in structures managed by the same private banks. So while headlines celebrate self-made billionaires, their money lives in institutions owned by old billionaires. That's not coincidence. That's continuity. Step 3. The derivatives empire. Now let's talk about the system's most powerful weapon, derivatives. As of 2024, the global derivatives market exceeded $610 trillion. That's over 25 times the size of the entire US economy. Derivatives are contracts, not cash. They're bets on interest rates, currencies, or stocks. And who controls that casino? 5 banks: JP Morgan Chase, Goldman Sachs, Citigroup, Bank of America, and Morgan Stanley. All of them descend from the same 7-family lineage. This is the invisible machine that creates or destroys wealth overnight. They can move entire markets with whispers, triggering panics or rallies, while the public blames the economy. Derivatives are the puppet strings. Every crash since 1987 has been amplified by them. And each time, these same institutions get bailed out, not punished. When 2008 hit, over $10 trillion in global value evaporated. Households lost homes, jobs, and savings. But the banks? They received more than $16 trillion in secret liquidity swaps and credit lines, coordinated not just by the Fed, but by the Bank for International Settlements, or BIS. And guess who sits on the BIS board? Executives from the same family's banks. This is the global control grid, a world where crises are engineered, liquidity is weaponized, and rescues are just transfers of power. Let's climb even higher, because there's an even smaller circle, a private financial Vatican that oversees them all. Founded in 1930, the Bank for International Settlements in Basel, Switzerland is known as the Central Bank of Central Banks. It's immune from national laws, taxes, or oversight. Its 63 member banks represent over 95% of global GDP. And behind its closed doors, a few unelected officials decide global liquidity policies, how much money flows into markets, and where. The first American directors of the BIS, representatives of the JP Morgan and Rockefeller interests. The BIS coordinates directly with the Fed, the ECB, and the Bank of England, ensuring that whenever a crisis hits, liquidity flows not to the people, but to the same elite institutions that caused it. This isn't a conspiracy theory. It's printed in the minutes of BIS meetings, available only to insiders. The public sees interest rate hikes. The insiders see global power consolidation. So let's name names. While the exact ownership is hidden through layers of trusts, offshore entities, and cross-holdings, researchers and financial historians repeatedly trace Wall Street's origins and modern influence to 7 core dynastic families. The Rothschilds, Europe's banking royalty, whose capital seeded the first U.S. central bank. The Rockefellers, oil barons turned financiers, whose empire birthed Chase Manhattan, which is now JP Morgan Chase. The Morgans, the original American financiers, who shaped railroads, steel, and banking policy. The Warburgs, German banking elites who designed the Federal Reserve framework. The Kuhn-Loeb family, early investment banking pioneers, later merging into Lehman Brothers. The Goldman Sachs family, Jewish-German financiers who engineered modern investment banking. And the Lazards, discreet Paris-based bankers who still advise nearly every Western government. Collectively, their direct descendants and affiliated funds now sit on the boards or shareholder rosters of the very institutions running today's markets: BlackRock, Vanguard, Citigroup, JP Morgan, and Goldman Sachs. The illusion is competition. The reality is collusion. Each family office acts as a quiet holding company, shaping corporate policy, philanthropy, and government decisions, always in alignment. And if a crisis ever threatens the structure, it's contained through buyouts, bailouts, or backdoor agreements. This is how 7 families became a permanent ruling class, invisible, unelected, and untouchable. Now here's the part that should concern every one of us. The next collapse won't look like 2008. It won't even look like 1929. It'll happen faster. It will be algorithmic. AI-driven trading systems now execute over 80% of all market transactions. And guess who owns those systems? BlackRock's Aladdin, Vanguard's Vantage, and JP Morgan's Athena, all linked through shared data infrastructure. When the system breaks again, and it will, it'll happen in microseconds. And when it does, the same 7 families, the same networks, the same invisible owners will already have moved their money. The rest of us will be left with the digital crumbs, devalued dollars, frozen accounts, and reset systems dressed up as progress. Because here's the truth Wall Street doesn't want you to hear. You don't own your wealth. You borrow it from a system built to extract, not empower. Every empire collapses when its money becomes fiction. Rome debased its coins. Britain inflated its pound. And America? It built an entire empire on borrowed time and borrowed money. But now you know the truth. You know the names. You see the web. So the question is, are we wiser now? Or just walking the same path in better suits? Share this video before it disappears from your feed, and subscribe for the next layer. Because in the next episode, we expose the digital phase of control, how AI, CBDCs, and the tokenized dollar will end financial freedom as we know it.